Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading or simply algo trading. Today we're going to cover last week and what I think is going to happen over the course of the next couple of weeks. I'm using the Oanda mobile app today because TradingView has some disadvantages in that I can't actually show how many positions I am currently holding. And that is an important step when you're looking at the overall longevity of the market and exactly what you can expect to see in the market from a moment-to-moment basis. This is the Euro USD market, and we can see where I've outlined the range in the yellow lines. The purple lines are the frequency-weighted order book, and the orange lines are the order book volume. And we can see the one thing that Oanda does well that TradingView really struggles with, being able to really visualize volatility. And as we look at last week, what a week of volatility it was. And we can see from both the order book, the frequency weighting, and the current range of price history data that the upper range is being respected. It's liable to be tested some, but overall it's being respected, and I expect that this week prices are going to drop. With that being said, we need to look at a bearish run equal to what we had a few weeks ago. But last week, boy oh boy, was it beautiful. The absolute volatility was just deliciously amazing. Profits were outstanding. And profits are going to be outstanding once the market begins reversing. But a careful, well-tuned plan is required. What you're looking at are the positions I have for my floating grid technique. And those positions are laid out based upon a first in, first out regulation. So every position is going to be a different size so that I can sell it off when I actually have the profitability. This is critical for the success of this kind of a technique. And it is a passive technique. It's not meant to earn a lot of money quickly. It's meant to weather the market for a long-term status. I have been trading this technique since December of last year. And as you can see from the red lines, where positions are picked up along the way against various candles. Let's zoom out a little bit and take a look at the market. And you can see the whole range of orders that I have on the basis of when I actually purchased those orders and how long I have been holding them. This is the critical point of the technique. Being able to hold them for a prolonged period, understanding the risks in your margin, and understanding how that affects your net asset value. You need to be able to focus on the long-term plan. And you can see that this particular cycle started in April of 2024. That is, I sold off completely and rebought in. And that's what this cycle covers for these positions, which is about 30 of them. Overall, this situation is a critical culmination of research and analysis. And in fact, if we look at the positions themselves, we can see that right now I am holding $136 active margin. That is a critical point of exactly what we are looking at. And the current balance, if I was to walk away from the table right now, would be a loss of $71. That's an important process to understand when you're looking at the long-term longevity of a trading technique. But of course, the activity clearly shows just how well things work out. Now, we are going to talk about Australian dollar later on, but for now, let's just find Euro USD positions. And this is really the whole point of success. Being able to trade off these tiny positions one by one over time in a consistent manner, and being able to weather the finance rates that the account is going to be charged over time. It is a critical implication that needs to be considered. Every day you hold a position, you are going to have a finance rate applied. Let's see if I can actually find that record. Need to go to it's in here somewhere. And that is one of the situations when you have this kind of strategy, is tracking the number of orders you're actually placing. Okay, financing. You can see I didn't get charged any financing rates because of the weekend. So let's go see if I can find yesterday's financing. Here we go. I got charged 2 cents for my finance rate. Of course, if we go through and see what that is, we see that every pair gets charged a different finance rate. Every order gets charged a finance rate. So we go down to Australian dollar, for example, and I got charged a total of 15 cents for holding that. But for Euro USD, I got a negative finance rate credited to the account of 13 cents. When you're trading, these are just some of the decisions you have to make. You have to focus on the details of that situation. So as I said, this is a passive situation. The floating grid is passive. It doesn't make money quickly. It's a low risk, low and slow technique. But let's take a look at the more aggressive technique that I've been talking about as well. The multi-position trading paradigm that I've been describing in previous videos for Australian dollar. Now I have roughly 150 open positions here. And as you can see, those positions are raking in quite a bit of income. But the risks for this particular situation cannot be underscored. Right now I have an active margin of $504. That affects the total longevity of my account. And I have to make sure that that total longevity is taken into account each step of the way. As you can see, the oldest entries, 75 days old. That whole process is critical as a part of your risk management. So as you function within your trading, as you look forward to where the market is going, you need to understand the risk of what you're doing. And as we can see from this market, we are close to the top of it, so price is going to start going downward. So we're going to see prices come back down at least to this level, I believe. And that's the same here as it was Euro USD. Once we see the highest point of the prices and we start seeing that turnaround, we're going to start seeing all of these positions being sold off and more positions being collected. And right now, if we look at the actual account, and this is a live real money account, you can see that right now my current account is 28% of my margin used. Here's my total amount of margin currently in play, or my exposure. This is important to understand when you're dealing with leverage or margin. Drawdown doesn't help you. This is what I am going to lose if my account gets hit with a margin call. So it's absolutely critical to pay attention to this number. My account will lose $641 if I get hit with the margin call. My balance is $1,377. So if I get hit with the margins call, I'm losing half my account. This is why you cannot just blindly set it up and leave it. You need to watch it every day. You need to make decisions every day. You need to focus on and carefully keep track of your risks. Before you ever start trading, you need to really think about every detail of your risk management. That is crucial. Don't underestimate just how bad things can get if you don't keep track of the details. This can be disastrous if I don't carefully monitor it and make adjustments as needed. But that's where the multi-positional trading paradigm really comes out ahead of the game. I can quickly make changes to the different layers and keep everything functioning safely and reliably in a way that manages my risk consistently. So as you look at your own risks, as you evaluate your own budgets, take into account all of those details and focus on exactly what you think the market is going to do. Plan for the trade and then trade the plan. Be consistent about your delivery system. Be focused on your intent and risks. Spell out your budget in detail every single trade. Don't trade until you know what the worst case situation is. Now this particular technique is using TradingView's Jackrabbit TV. I've talked about the different recipes that I'm using here, so I'm not going to go into that too much detail, but be sure to check the channel history to get information on those videos. So between Australian dollar and Euro USD, I believe both markets are poised to start trending downwards, at least for a few days. I don't think that this entire week is going to end up like last week, with a very generous bullish rally. I think we're going to start seeing some red days, and we may even see days like this, where the bears just completely reset the market in a massive way. So between the two assets, it's important to stay focused on the long-term picture, but be aware that we are poised for corrections. And those corrections are going to have consequences if you don't have your plan in place. If you like this kind of content, please hit that thumbs up button. If you're not subscribed, please subscribe. If you have any questions, please let me know. Feel free to leave a comment and let me know how your trading has been. Has it been good? Has it been difficult? Share your thoughts. Thank you for watching, and until next time.